Futures point to a lower open on Wall Street as investors turn their attention back to the intensifying European debt crisis. The calendar is very heavy today with holiday same-store sales and a slew of economic data, including challenger job cuts, ADP employment report, jobless claims, ISM manufacturing, and crude and natural gas inventories. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. And welcome to the first Thursday of the trading year, a very busy day. We have December holiday same-store sales, 3 pieces of jobs data, ISM manufacturing, and the crude and natural gas inventory. So Scott, buckle up. It's going to be a busy one today.
Yeah, it'd be nice if some of those come in positive because as of right now, the futures have been flirting with down 8 to down 12 handles all morning long. You know, we started the year off on a positive note. Yesterday, we were down a little bit, digested it. The bulls have been getting a little bit more constructive. So, you know, it would breed confidence if we could continue to hold this upper level in order to finally make some progress, hopefully after the real jobs number on Friday.
Right. So we have, a really headline-driven tape today. We, earnings are starting to kick in. Alcoa next Tuesday is when the season really gets hot, but we had some really important numbers come out last night. We have some lined up for today. How are we positioning ourselves in front of this headline-driven market?
Well, I think traders are still trying to hold like 6 to 8 different positions that have been acting well, and you've definitely had your have and your have-nots. Yesterday, the market probed a little bit of that upside gap on Tuesday, so we have a low to trade against. So if you look here on the spiders, you will see that yesterday's low, wound up being pretty constructive. The low here was 126.71. And if you look where we came from, we're still in good shape. You had your low in October, your low in November, your low in December. We broke this downtrend, and we've been trying to get some traction. So what I'm going to do is I'm hoping that the low from yesterday holds. That would make it a lot easier for the bulls. But if we break below yesterday's low, I think the area that has to really hold is the 200-day moving average, which stands right around this 126. So I would say about 125.75 to 126. That would be the area that if we start breaking below, traders like myself might start to pare down and lose a little bit of my upside momentum bias.
Right. Moving along to the sector spotlight, we're going to look at the retail names again. We're getting December same-store holiday sales. There's a lot to look at. Volume in terms of people traffic is really heavy, but can the numbers come in to justify that? Will the margins be a little bit better? I know it was very promotional this year, so I think there's some concern out there. They might be a little bit tight, but let's kick it off with Lulu, which was a great name to trade in 2011. It had a big move yesterday. Think it can make it, or is that just bid up into the numbers today?
Well, Lulu has been frustrating over the course of the past 3 months. Then yesterday, Goldman Sachs upgraded it. Traders came in. A lot of us weren't even long it, but guys were able to actually position intraday for a move to close on the highs. So that's very constructive. If you look at the chart here, you will see that we did close on our highs. Very strong move, took back the moving averages. So with the futures down today, traders would like to perhaps buy this down open. So I would say as long as it stays above the top third of this area, you might be able to buy this dip, and then at some point in the next few sessions, add above yesterday's high, and then the next real resistance comes in around 55. So for right now, I think that yesterday's action should lead the way higher.
Moving on to the performance names, Nike and Under Armour. These were great names to trade. The performance names seem to have been the sweet spot.
Yeah, well Nike is a leader, still hanging up there. It was good to see that some of these strong stocks got sold off in the beginning of the year because you were finally able to take them off the books, and you didn't need to say, hey, look, I own this. This was strong, so that's why you see that sometimes, and rotation happens. But Nike held in there. So if you look at the chart here at Nike, you will see very strong pattern, looking to break out. So look at the chart here, and once again, it'll come up. There you go. Right here, yesterday tried to break out. I guess it's waiting for these numbers. If it can get over this area with some kind of, I would say strong volume above 98, it's going to break out. You have an uptrend intact. All looks well. It's above the moving averages. Nike looks really good. I have to say Under Armour does not. Under Armour is one of those, lower tier names right now, okay? And I would say it's in this tight little wedge here. If it starts to break below 70, it could get a little bit of a further discount. If it could start getting above 75, I think the bulls would feel a bit better.
Let's take a look at the luxury names, Tiffany and Coach. We got really constructive with these in October, anticipating a pretty decent holiday season, and they pulled back a bit in November. European sales weren't affected as bad as we thought they may have been, and the U.S. tourist was really strong. So I feel like from the fundamental perspective, we're getting a little bit more constructive.
Well, this chart doesn't look as bad as like UA, but it's not great, but it's constructive. So take one quick look here. You will see you had a bit of a move off this low. It's flagging here. This stock, Tiffany's, will look better if we could start clearing this flag to the upside. So this level here to the upside is around 68. So above 68, it'll get to those moving averages about 71. And if you do look at Coach, also nice little tradable pattern here. It's coming off that lower pivot.
COH.
Oh, sorry, that's COF. COH, my bad. Little typo, fat finger. I knew that didn't look like what I saw before. So here you go. Here is Coach. I knew it looked better than that. And this is that area here. This starts to get above 6160. It could break this downtrend and could start moving to the upside.
Let's wrap up the retail names with Target and Best Buy. We've been speaking about this for the past couple of weeks. We noticed with the Target chart versus Walmart, how is it Walmart's hitting 52-week highs and Target just isn't trading along with that? And then with Best Buy, could that be almost like a Sears story where the relevance is gone because you do have the Targets and the Walmarts of the world?
Well, you nailed that on the head. I was like, why is Target not acting well? You talked about maybe because they got too heavily involved in the food business. And sometimes it's good to get the fundamental story behind the chart. The chart in Target told you the story regardless, but it was good to hear it from Jill. So if you take a look at the chart here, you will see that you had this up open that got sold. Then you had a lower high here. So you have a high, lower high, lower high. Then when the market was rallying, the last 2 weeks of December, it went nowhere. So that was a precursor that more pressure was to come, and it then broke this support. So I would say at this point, Target is still in a void, and BBY, you better run for the hills. This has not had one single bounce, big gap to the downside. This starts to break below this recent support area. I would say coming into, what is this, the low 23s. It could just be a teenager soon.
Well, let's take a look at Walmart really quick just to show the converse action in that.
Well, Walmart, I listed as one of my stocks of the year. Great daily chart. It's a little bit extended. I think it's going to need some time. What I'd like to do is I'd like to show you Walmart. This is the daily, looking okay. I think it needs a little bit more time here for a trade, but if you go to this monthly chart of Walmart, it looks unbelievable. Stock has, huge move way back before the decade started, and then for the last 3,000 days plus, it's been consolidating in this tight range, driving people crazy. So if you didn't get driven crazy, you could have the reward that it finally gets above 60 to 62 later this year. You could see another upside breakout well north of the highs of 75.
We are going to a quick commercial, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches and take a look at the semi-space. Goldman Sachs on Tuesday came out with their 2012 outlook. Again, still neutral on the sector because they're waiting for more corrective action within the cycle. So let's take a look at the SMHs and see what the sector's doing overall on the charts.
Well, if you take a look at the SMHs, it's still consolidating, at least as a pattern to trade off of. So if you go to the chart, you will see that it's been in accumulation mode. It had a nice move, earlier this year, and it actually led the market during that October to late November rally. Since then, it's been consolidating, going sideways, and if you take a closer look, you will see that you now have a nice little downtrend to contend with. So if I would say 31 or above, perhaps it starts to get some movement at this point. You could be in a tier 1. It's not leading the market, and it also isn't lagging. It's just kind of like middle ground. So
if we're going to take a look at the semis, we have to take a look at Intel. This was pretty close to the highs.
Yeah, Intel got beat up on that disappointing announcement. You remember when that came out, and that took some of the wind out of the tech sector. But since then, it's repaired. I guess it's been priced in now. It does have a low multiple. They do give a dividend. It's got a lot of liquidity, and right now the market seems to love the mega cap liquidity. So if you take a look here, it looks good. If you stayed tier 1, I think you could continue with that. I wouldn't really add to it, but there's a nice little just a channel that's been developing for over 4 months, and typically that shows accumulating a move that took place from below 20. So at some point this year, I do think it's going to break above this 25.50, and it could end well north of 30.
Moving on to ALTR, this is one of the names that Goldman actually upgraded on Tuesday, as they see it being one of the names to benefit once this inventory correction occurs.
Well, it looks like that upgrade was sold, and at this point it needs a little bit more time to prove itself. So if you look at the chart here, I don't see anything so great. You do have that upgrade right here, sold. You have a small little support area coming into play here. So I would say as long as it holds above, just say 36.50, it's fine. Because then eventually you can get some momentum above this 38.50. So if you're not committed, just watch this develop here above 38.50. Maybe it gets some momentum, but right now it's still building.
Now, if we take a look at Microchip and Atmel together, it's interesting. Goldman downgraded Microchip to neutral. Basically, it was a valuation call, but they upgraded ATML.
So let's take a quick look at ATML and see if that upgrade helped. because right now if you take a look at the stock, it's right at the bottom of the range. To me, it's below all the moving averages. It's not showing me anything compelling unless they know what's going to happen in their earnings report, which obviously sometimes Goldman knows. That's why they get in trouble. You could see a downtrend here. If it starts breaking above this, I guess 855, it could get a move into the 9, so watch that. But again, it looks like a bottom feeder type trade.
And finally, Novelis and Clack. Clack was one of those names that we traded. I think it was the beginning of December. We did really well with it. It picked up some nice momentum at the end of the year. And this was, if you were trading in the 90s like Scott and I were, we wouldn't like to admit our ages, but this was one of our favorites to trade. Yes,
it's funny. Like last year, some of the names that we traded way back then have come back into play. And we used to always say, you got to change with the times. You have to rotate with the sector. But I guess after a decade, they can come back into play, and the semis were good, and Clack did lead with Novelis. But you look here, the chart's okay. You still have this uptrend that it's been in place, and every time it holds it. So I would say you have to really watch this 4650 area to see if that stays in check. If it starts to close below this area, the momentum could leave and it could trade lower. So if this holds, then the next area you should be watching is these highs to see if any of these semis could start breaking out to new highs to add momentum.
Moving along to quick hits for some quick cash, we're going to take a look at one of Scott's favorite names, Apple, which has filled a very important gap at a certain level.
Yes, Apple's been my go-to stock for my whole career, but lately, the last 2 weeks, it's been an unbelievable hold. There's been like 5 different tradable setups, and right now the last tradable setup took place, and that took place yesterday. It was actually good. It showed relative strength while the market was down, went positive first, and then filled the gap. So if you look here at the chart, you will see here's Apple. I've spoken about this so many times. This was the last buyable pattern here around 398. Came up, went to resistance, failed, then held higher, and then we had a nice trade into the gap. Right now this gap is filled, which is technically good, but after the size of this move, I would say be very light here because it's going to take a great earnings report to get through those old highs of about 424 to 427. So at this particular point, I'd get back to tier 1, not trade it that much, and then after the earnings report, let's hope that it'll be new at all-time highs.
Scott sends his real money updates over 3 to 4 times each day, and one of his best calls since we've started doing this was with Netflix. He sent over a note at 11 o'clock at this on Columnist Conversation. This thing is ready to rip, and that was one of the most fantastic calls we've seen. You could have done very well with this yesterday.
Well, it just shows you that sometimes there are good trades out there, and everyone says, oh, trading's dead sometimes. You know what? Yesterday was a case in point where you could have made 7 to 10% in a tradable pattern. If you look here, Netflix has got so battered and bruised, and coming down from 200 or so all the way down, you saw a nice little lower base here that was starting to perk up a little bit. So yesterday I had on my price point sheet, if it gets above the high or the prior day high, it's a buy. And then more importantly, in the first 2 hours, it was showing some volume before it took off. You could see it a little bit better on a 5-minute chart. If you look here, this was the initial move that woke it up off the open, and then it went sideways and showed relative strength while the market was coming in. And then above this 74, it was off to the races. You could have seen 6, 7 points. So at this particular point, I think there's enough shorts in there that if it starts to trade above yesterday's high of about 81, you could see a move to this level, and this level right here is realistically in the 90s, and maybe even fill this gap at some point. It's a trade, though. We're not saying Netflix is going back to 200 or 300. Right now, it could go, though, from 80 back to the 90s, and that's why you're in this business, to catch moves like that.
Moving along to Mosaic, ticker MOS, which was my 2012 pick for the year. They reported last night after the bell. They beat on EPS, missed a bit on revs, but overall, the print looked really good. I like it long term, but we're still here to get some quick trades. Let's take a look at the chart and see where we are.
Well, with these ags, sometimes even soft reports get bought. It always happens. For some reason, they're always like giving them passes because in the future, it's going to catch up. So if you look at the chart here, this is what I'll watch on Mosaic. If it could get above this 53.50, I would think that's very constructive on the chart. So above 53.50, you then can get a move back to what has been like a $60 resistance there. So short term for traders, if it doesn't get above 53.50, we'll probably avoid it for a little bit. Starts getting above there with some volume, I think it's game on for Mosaic.
Yeah, I certainly hope so because I'm in love with this name and I'm in love with the sector. Moving on to Green Mountain.
Green Mountain has a lower wedge. It's like a Netflix type story where it was a momentum name, momentum left. It's been battered and bruised. At this point, I don't know which way it's going to break, but the range is really tight. So I think you could wait for the volume and then jump on board here. So if you look at Green Mountain GMCR, you will see here's what I'm talking about. Look how tight this range is down here. So there's so many shorts involved also that if it did get any kind of catalyst above, I would say, what is this level here? About 47.50. It could really have a nice move, but if volume doesn't come in, the shorts are going to win, and below 33, it could take another discount to at least these lows, and that's, 43. So at this point, watch this close, see which way volume breaks this.
Let's wrap it up with Goldman Sachs. Now, going into the year, a lot of people, even Cass was saying one of his top 15 2012 surprises that the financials are going to outperform. And they got smacked around last year, so how much worse can it really get? But a lot of people that we've spoken to love Goldman.
That's kind of, that's not to say funny, but
right.
In the last week or two, the banks have been acting well. And to me, Wells Fargo has been acting the best. JP Morgan is one that I've been focusing on long, and it's been paying me, actually. You know, we were long from last week, I think in the 30s. It gapped up on Tuesday. Yesterday it was down. It went positive and had a nice push. And Goldman's still kind of lagging. I'm long some Goldman. I think Goldman could play some catch-up. It likes to play around with everyone's head. And if you look here on Goldman Sachs on the chart, this is what I'm watching. You know, I'm long some. I'd love to see it hold this low 92 area, but if it could start getting above 96, I think you can get a nice little cash flow trade back to 100. And if it breaks this downtrend with any type of news or any type of volume, you know, it could get back up to 115 before it sees some major resistance. But for right now, it's lagging a little bit. See if it starts to play some catch up.
So we have a huge day in front of us. A lot of headlines are going to move this market. It's actually going to be a fun day to trade, in my opinion, because it could be one of those
and you have to worry about what's going on.
But and we also have the ADP number tomorrow, and I really feel like everyone came back to work this week. They care about today. They care about that huge number tomorrow. And I think once we get past this week and then we're into the following week where Alcoa really kicks off the earnings season, we could start to get a little bit more constructive.
I would like to see us start trading higher. If we could just go from negative to positive today, or just, you know, come well off the lows, I think that would be a win. If we go positive and push, I think we will get better attention on this market. The last thing we want to happen is that we close in the dead lows today, a bad jobs number, and then everyone's like, okay, we're back in this crappy range and no one cares. So let's hope, you know, we can't control the market, we can only control ourselves. Right now, you still have to have a bullish bias, watch relative strength, pick and choose your spots, because there is a lot of money out there. You just have to learn how to trade it.
Don't forget, at the end of the day, catch Scott for the wrap-up of the charts. Have a great trading day, everybody, and a great week.